Yeah, good. Sounds very good. All right. Well, welcome everybody. Thanks for joining in this morning. I am Joe Rodola, your guide today through the realm of tax planning for sole proprietorships. More sole proprietorships in America than any other type of legal business entity type. So we're kind of the majority. All right. It's the easiest to form. It is the normal operation for a small, super small business, especially if you're a service business. Maybe you're operating out of your home. One or two people max involved, husband and wife normally as a team, or by yourself as I am in my business. It's just me. I'm the janitor and everybody else. But we're going to talk about tracking and taxes because I'll tell you what, I've been in business now. It's my 13th year, and I've been bitten by the, oh my goodness, I owe so much money at the end of April that it's scary. I don't want you to have to go through that. Okay. Very simple. All right. So let's see if I can get this slide deck going. Here we go. Okay. So welcome to Shasta-Cascade Small Business Development Center. We're the SBDC. Okay. We're a program of Cal Poly Humboldt. We provide confidential, no-cost, one-on-one advisory, kind of consulting, okay, which is hopefully what you'll end up doing next. And of course, these training services as well. We do in person here in Reading or webinars that we broadcast throughout. We're funded by our tax dollars, okay? So the SBA receives funds from the federal government. Then they allocate a certain portion of those funds to basically Cal Poly Humboldt is our kind of head bookkeeping center, okay? They handle the money that comes in from not only the federal government, but the state government, the economic development, the governor's office of small business and economic development. So state and federal funds are arrived, and then we get paid out of those pool of funds. So thank you all for paying your taxes. We have several advisors here in the Reading, Shasta County, Trinity County area, Siskiyou County area. We are specialists in certain fields, okay? I'm a startup guy and a money guy. I'm an old banker by trade. And we have people in marketing. We have people in that can handle all the social media options and ideas for your business. We have QuickBooks specialists. Got some tax and legal implication specialists. All of us that have done work elsewhere that have been hired on board. I like to call us in the Old West hired guns, okay? We contract with our center to offer advice. Okay, we're an advising group. Also, we have nearly 4 dozen specialists outside our area in the Sacramento and San Francisco area, Bay Area, that go into specialties even further, like import-export, like restaurants, okay, medical services. Those are all expert fields in the, I'm a generalist, both for the most part, except for the money, right? Because I'm an old banker. But if you want specific guidance, we have specialty area group specialists throughout Northern California. This is our brag screen. We like to talk about it, stuff we've been able to help people with. Very proud of these screens, getting these businesses started, and of course, finding capital for those businesses to grow and to start. This is kind of some of our upcoming events. It wasn't updated until the last second because I was a little slow at the draw. Obviously, the tax preparation class is what you're experiencing now, and tomorrow We're offering webinar opportunities for minority, veteran, women-owned business, another webinar, and there are much more coming soon. I know we've already started our October, November list until the holidays. Holidays, we slow down a little bit. To find out what we have available in the way of webinars and or live classes, check our website, sbdcsc.org/events, and that'll take you to the list. Okay, this is our disclaimer. Whoops. Yeah, I wished I could have passed it that quickly. We get the attorneys, right? So this again is our disclaimer. Those of you who are listening in and can't see, I'll have to read it. The information provided in this webinar and any supplementary materials provided to registrants are intended for the educational and informational purposes only, does not constitute professional, financial, and legal advice. In other words, we are not CPAs and we are not attorneys. No registrant should act or fail to act on the basis of material contained in the webinar without obtaining further proper financial, legal, and professional advice. Northern California Small Business Development Center and its host, Cal Poly Humboldt-sponsored Programs Foundation, specifically disclaims any liability, loss, or risk, personal or otherwise, which is incurred as a consequence, directly or indirectly, of the use of the application of any of the information presented in this webinar. So in other words, you're getting my individual information from a person that obviously has been around the block a few days, but I'm not a CPA and not an attorney. So again, before you leap, we ask you to check into your close-knit advisors in that area. And there's me. I'm kind of the startup guy for the most part. 25 years experience in commercial lending. I've been teaching classes forever. It's what I really enjoy. 13 years I spent in the credit counseling area. I was a certified credit, housing, and reverse mortgage counselor for years. 13 years experience small business owners, my 13th year of being open, and 11 years experience as a small business advisor for Superior California Economic Development and SBDC. All right, here we go. So here's our little quick agenda. We're going to talk about business structures and legal structures, strategies of how to operate the sole proprietorship, especially when it comes to the taxation. Talk about income and expenses quickly and keeping it simple. We noticed, especially when we got involved with the COVID-19 disaster, that many small business owners did not realize completely what their profit and loss reports were saying, if they had them, and what they were reporting to the IRS. So we thought this would be a great time and an idea to make sure that we create a class to show people easily how, if you don't have a CPA or a bookkeeper, right, you can do the accountant's job relatively easily. Okay, I've been doing my own for years. If you're a numbers person, pretty cool. Pretty cool. Okay. All right, business structures. There's kind of the basic of all of them. Sole proprietor, partnership, LLC, corporation. Corporation is normally for the big businesses, right? McDonald's, corporation. Okay. I'm not a corporation. Person that owns a salon, for the most part, maybe an LLC, but a lot of them are sole proprietorships if they just rent a chair to do the hair in, right, from somebody else's salon. Handy men and women, lawn maintenance, all those, for the most part, sole proprietorships. Okay. Partnerships, two people. Okay. They'll split the profits, whatever. You'll normally have a partnership agreement. And an LLC, limited liability company, is kind of a in-between. And in between the sole proprietor and the corporation. Each level has expenses involved. Even a sole proprietorship, if you're operating out of a city, you're required to have a business license. If you're not using your surname and the name of the business, you have to file fictitious business name. Those two things alone will cost you a couple $100, even if you're a sole proprietor. Okay? If you have to go through that. My business name, for instance, is Joe Rodola's Debt Consulting. That took care of about $150 right off the top. I didn't have to pay it. I used my surname in the business, didn't I? So I stayed sole proprietorship, no fictitious name. My business technically opened in less than a week. It was pretty easy, out of my house. Okay, I have half the second bedroom. My wife has half the other half for her small business. I have a couple of laptops in there. We got tables, some filing cabinets. Anyway, that's how we operate our business. Okay, sole proprietorship, what are the positives? Well, person who is exclusive owner of the business entitled to keep all the after tax profits. So you get the expenses off, you charge people stuff, you got to pay some taxes on the profits, and you get the rest. $1.50 is yours. How about that? Simplest form of business, as I mentioned. You prepare and file your tax return on your standard personal 1040 tax schedule. Okay, it's called a Schedule C. No separate corporate tax returns are required, obviously. And you don't have to register with the Secretary of State. Pretty cool. The only people that are really going to know about your business are the county, if you file a fictitious name, and the city in which you operate. Okay. You can hire employees and you can hire contractors. And obviously you have some lower operating costs because you don't have all those other expenses. The cons, the negatives: a sole owner liable for all losses. So you're not only the boss, but you're going to take a licking if you don't, keep ticking, right? You don't make any money, it's not going to be worth you to stay open. And unlimited personal liability. Somebody wants to sue you, guess what? They can come after you, they can come after your house, your boat, your RV, or whatever. Okay. So liability is much higher on a sole proprietorship. You have to weigh your liability risk. Okay, and we can help you decide that too if you come in for an individual meeting and consultation. We can help guide you through those decisions as well. Higher tax liabilities versus an LLC and S Corp because of the way the money is traveling through business. Limited on certain tax deductions, obviously, such as paid health insurance. It makes it a little more difficult to deduct some of these expenses on a sole proprietorship. Okay, partnerships, you have separate filings. LLCs, you also have separate filings. There's also a minimum franchise tax fee of $800 a year in California. Oh, joy. And corporations have a similar separate filing. And of course, they have fees as well. So that's, really why these other three types are considered only upon probably the liability, personal liability question. For instance, if you're a lawn maintenance and you're using chainsaws and mowers and edgers and cutters and whatever you're using, a lot of liability there, right? You're at somebody's house and you shoot a rock and it kills that client's dog. That could be a problem, okay? Or cut your arm off, fall off a ladder. All those things come into play. So an LLC, I always suggest LLC. That if you're going to start a sole proprietorship out doing something like that at a higher risk, you're going to have to carry liability insurance anyway to get on somebody's property. And it's going to be high. It's going to be high because you're using chainsaws, right? So the LLC is probably the way to go. You'll have a little more expenses in setting that up. And you have obviously a lot more equipment than I have. My equipment's right here between my ears. I'm, disseminating information to people that I have experienced and I have knowledge in, but I'm not climbing ladders, cutting anybody's grass. I'm not using any fancy equipment except this laptop. So, all right, let's talk about some strategies. You need to track expenses. Hugely important as a sole proprietor to know what you're spending on the business, whether it is a cell phone, whether it is the laptop I'm using, for instance, okay? Mileage, which a lot of people forget about. My wife doesn't because she's a real estate person, real estate agent. Real estate agent, one of their biggest expenses each year is mileage, especially if you're a sole proprietorship, because as of last year, you were able to deduct over 65 cents a mile for work-related travel. Well, when she visits houses, sets them up for sale, goes out to an open house, takes potential buyers, goes to meet with the seller. She's on the road all the time. See? And all that is deductible. Okay, this is deductible. Estimating tax liability is hugely important. Okay, so if you do like 15% of your net profit, in other words, income minus expenses equals net profit, take 15 to 20% of that and set it aside and or make quarterly payments to the IRS, which you're supposed to do. You're set. You're set, okay? Use a separate bank account. Don't use your personal checking, okay? Collect and track sales and specific tax and timely payments on those quarterlies, okay? And don't forget a 401k plan. That's one of the easiest to forget for a sole proprietor is you're still going to want to retire, okay? And you have deduction capabilities by putting money aside for your retirement. You get to deduct. So that's hugely important. And of course, there may be potential tax credits. Check with your CPA. Okay, income versus taxable. This again came up very heavily, especially during COVID, when people had to decipher between what you made and what you really made, right? Because what you brought in isn't what you make. No. Okay. My daughter's a prime example, has a side gig, one of these art classes at night at a restaurant or a bar, and you get invited in and pay some money. She guides you through the painting of this painting while you're with your friends, and buys something to eat, and paint the painting. So she wanted to know about how much she was going to make. Well, if she charges $30 a piece for the people to come to that class, how much of that $30 does she get to actually spend? Well, she has paint, brushes, a canvas, travel expense to and from those event centers. If she buys the first drink for the person that's there, her client, that's an expense, right? So we sat down when she started. She started in 2015. So she's been open now for 8 years. Excuse me. And we ascertained after all those expenses, she gets about half. Since she's performing the training herself, she ends up with 50% of the gross sales. So if she's charging 30, this is pretty easy. I told her don't spend more than 15. Okay. The rest leave in the account because you're going to have to buy some more canvas, some more paint, some more brushes, etc. So, and that also, that net amount becomes taxable income. Okay. Sales revenue minus allowable expenses equals taxable income. And obviously, business expenses are important to track. Whether you keep a little box where you put all the receipts, receipt for everything is the way to go. You can use these cell phones. I think there are apps available where you can use a cell phone to actually track all these expense tickets. But I'm old school. I got a shoebox every year, and the receipts go in the shoebox. Well, I tell you. Then I can put them on my computer program or Excel sheet, which we're going to cover in a minute, and you can track. Okay, you can track those expenses and make sure you always know what your net income or profit is. Okay. Income and expense. Okay, why track income? Well, obviously you want to track income because you're gauging your profitability. You can find out where you're going, right? Up, down, staying the same, whatever it might be. You can make adjustments by tracking that income if you need to do something different. Like my daughter, when she started, she was only charging, I think, $20 a piece 8 years ago. And now she's, had, because of costs, okay, costs of product and her inventory per se, paint, brushes, canvas, she's now charging 30, right? Got to make adjustments quickly, otherwise you're going to end up losing money. It assists financial institutions and investors in making loan. If you need to borrow money for expansion, okay? And obviously, this will help you know how much you have to pay in taxes. Again, 15 to 20%, pretty safe of net, right? So if you net $1,000, $150 to $200 of that's going to go to taxes. Okay, make sure that you deduct that at least in your mind when you're doing your budget, when you're doing your budgeting. Things to think about before setting up the books. How complex will your bookkeeping be? If you have employees, it's going to be complicated, period. Okay. So you may want to have a bookkeeping service, accounting service, CPA, do that for you. Possibility. Adds to your expense side, but with employees, they'll make sure that the money goes to the appropriate places at the appropriate times so you don't get fined. Okay, hugely important. So will you have employees? What forms of payment will you accept? Most of us do accept credit card payments, right? So you have expenses there for accepting that card. That gets written off. You do not get to keep the full amount of so my daughter, $30. She automatically is taking credit cards, of course, because they prepay for the classes. There's a deduction. She uses, I think, Square or PayPal, one of those. And there's a deduction for fees that they charge. Okay, will sales be immediate or delayed? Most of us are immediate. If you end up billing like we do for SBDC, we bill at the end of the month. We normally get a payment somewhere between 2 to 3 weeks after we submit the bill. So that's a delayed payment, okay? And will you use bookkeeping software like QuickBooks or one of the others, or a simple Excel sheet, which I think I'm about to show you. Again, use a separate business account that helps you track and set up the categories, income and expenses correctly so that you know what you're getting and when, and how you're going to go ahead and deduct those expenses. If you're selling product, you also have to collect tax, don't you? Sales tax. So if I'm selling this pen, right, I pay $1 for it, I sell it for $2. The person that's buying it for $2 in California has to also charge 7.25% sales tax on top of that. See, and you got to send that to the state. So that's hugely important that you do that on time as well. Most credit card companies that accept payments, either by phone or otherwise, will set that up for you, can set that up for you, okay? Pay those taxes and make sure they're paid on time. Use software. Good old QuickBooks. We have a QuickBooks trainer consulting here. So QuickBooks is a viable tracking system for tracking income and expense, and obviously using the service, also viable. Or tracking it yourself, and I'll show you, I think, a tracking it yourself here. Next screen. Keep it simple. Simple to use Excel spreadsheet. Now we're going to get tricky. Let's see if I can actually get tricky here. So I got to go new share, and we're doing this one here, I believe. Let's see if this works. All right. Hopefully you are seeing an Excel sheet. We got an Excel sheet there,
looks
Emma?
good.
Thank you so much. Stated 21, just forget the date. Obviously, I prepared this a little while ago. We will be sending this Excel sheet to you along with the slides, so don't worry about it. You will get the full slide deck and this lovely Excel sheet. This is one I found online about 15 years ago. It's a very simple, easy to operate profit and loss statement. Income statement is sometimes called income and expense statement. Okay, P&L, you got all those terms. So at the top here, you see how much you made, how much you sold or how much you made. This is a business that sells a product, okay, ABC Company. So ABC Company has a cost of goods sold, okay, cost of goods sold. So what is a cost of goods? Well, again, with the pen idea I just showed you, if you paid $1 for these pens, okay, that's your cost of goods. You sell it for $2, you got $1 gross profit so far, okay? $1. So as you see here for January, sold $1,000 worth of stuff, $200 was your cost of goods. So your gross profit, what? It's $800, right? And you go along the year, it adds it all up for you on this right-hand side, and you end up with a gross profit of the year, $15,760. This has all the sample formulas built in. All you do is put your numbers in here. It does all the adding and subtracting for you. Pretty sweet. Pretty sweet. So now you've got a gross profit here, but you have other expenses, right? So you have things like rent and utilities and insurance and, whatever, mileage. I put mileage here at the time. So all those are deducted from your income, your gross profit. Okay. So you got 500 to 50 so far. It comes to 789 in January and 75 cents. Okay. So your net profit for the month of January here is $10.25. That's something. So that is important to know, isn't it? Because if you're dipping into this during the month, and transferring money over to your personal checking account thinking you're rich, you better know where you're headed, right? Rent probably never changes or doesn't change much. Utilities is always going to happen if you have utility costs. Telephone's going to be there. Insurance going to be there. So all those ongoing expenses tell you that you need to at least make that $700 to $800, $600 to $800 worth of expenses or more to break even. And if you make more, of course, that goes into your pocket or bottom line. So as you see, as the months go on, you're making more and more sales, higher cost of goods, but it doesn't matter because your gross profit's climbing, but your expenses are relatively staying the same. So look at that. You end up making money, don't you? By December, when you're making 2,200 in sales, you get to keep 1,075 of that net in December. So when you add across, your total net profit for the year is $7,365.25. Okay. And this particular Excel sheet, since it has all the formulas built in for adding and subtracting, will do all that work for you. I suggest you post monthly at least. At least. Okay. And when you automatically put these expenses into your 1 year profit and loss or income and expense sheet, you basically know how much stuff you got to sell to at least cover your bottom line. It's roughly $700 according to this. $700. Okay. And remember, of that $7,365, you're going to have to pay tax. So if you do the math on 73, I don't think I did tax deduction here, did I? I don't believe so. So if I do tax on 7,365 times, say, 0.15, yeah, so about $750 of that's going to be taxed. You're going to have to send the IRS, okay? 15%. So the rest of that, 600 and something, could end up obviously in your pocket or leave it in the account and then let it grow from there. Okay, let it grow from there. So that's an easy tracking device. It basically is a format that QuickBooks can make for you if you use the QuickBooks program. In other words, you can just print a P&L, profit and loss income statement, after you input all your income and expenses into the QuickBooks software. It'll make you one of these. Okay. First 5 years of operation in my business, I just handed this to my CPA, my accountant. Okay. A year-end total. And this last line is the key important line, the totals. Okay. Because this is what you're going to have to report on what we call a Schedule C. Okay. So we're done with that. Any questions on this so far? Let's see, we got some chat
So
items.
yeah, so there is a question that might relate to this form. So someone's wanting to know, for a home-based business, can you deduct part of the rent, utilities, etc.?
Very, very good question. And the answer is yes. I, again, am not a CPA or an accountant. So we are going to suggest that you contact CPA accounting firm I just use number crunchers here in Reading. It's a little bookkeeping accounting firm. I use them for all my tax stuff. And they can walk you through the steps on how to calculate the percentage of usage. It has to do with square footage of the business space. Okay. The hard part is deciphering if you really only use it for business or if you have relatives come over, do they actually sleep there? And so there's some percentages. It can be a it can be an interesting little effort in knowing how to track that. But the basic answer is yes. And there's formulas that are needed to apply to the square footage you use and the percentage of the total overall house square footage that you use for business. Okay.
So, and then what about if someone has, training or professional development classes? Can that be counted as an expense?
Yes, if it's needed for your business, like I'll give you an example. If you're heating and air, you work on heaters and air conditioners, okay? And you're going to classes to learn about, the latest and greatest things in repair for heating and air conditioning. Oh yeah, that's all counted. Yeah, that's an expense that can be deducted. There are some meals that can be deducted. If you are marketing your business and taking a potential client out for lunch, that can be deducted. Got to track the heck out of this stuff, though. You can't just be miscellaneously flying, okay, by what's the saying, by the seat of our pants. Got to have it written down, got to have the receipts, and got to have them, tracked, okay? And there's percentages, again, that you can use and rules. The IRS.gov website will give you some of those percentages. Again, please check with your accountant CPA, but definitely the professional development classes can be written off. Okay. Anything else for now? We good?
Looks like that's it for now.
For now, we'll move on. Let's see. I got to share something else now, don't I? Share new. Okay, so now we've tracked all this. If you can try to remember the 19,700 in gross income, top of the page, 7,365.25, but the bottom of the page is our net, right? So what do we do with that? Let's see if this is going to pop up correctly. Oh, it's big, huh? It's a big one. So this, ladies and gentlemen, is the schedule. Is it showing up, Emily? Sorry.
Yeah, looks good.
Profit and loss statement, good. Schedule C. This is the one that was used by all of us in 2020 to gain access to the funding available when we were closed. Okay. The things they asked for were a copy of your Schedule C for sole proprietors. And I can tell you, and Emily can too, that we had phone call after phone call saying, what's a Schedule C? See? So you will have no excuse for not knowing what a Schedule C is, okay? Because this is it. It's an actual IRS document form that gets added to your Form 1040, which is normally the regular income tax document, right? It's got all the numbers. And what this does is it officially shows the numbers on that Excel sheet in an IRS form. So there's that number, isn't it? The gross sales, 19,700. By the way, this has to be rounded off to the nearest dollar. Okay, they don't do cents. Okay, no cents in this. And then all the totals go in here, right? Business property, advertising, insurance. There's all sorts of things you're going to list in this expense part 2 category lines. Okay. And then you're going to end up with total expenses as it was on the other page, $8,395, which comes off of your gross sales, equaling line 31 net profit, 7,365. Isn't that cool? So we transfer all the numbers from that Excel sheet into this form. Okay. And this then on your 1040, that number is total business income on the front page of the 1040 individual tax return. Okay, individual tax return. This is the number that was used right here for people to gain access to grants and loan funding during and kind of immediately thereafter, in 2021, the COVID disaster. And again, this is the important piece or document that if you need to go get money from a bank, get a loan, they want your Schedule C. They'll want your entire tax return. Don't get me wrong. They'll want 2 or 3 years, normally 3, of your tax returns. But for your business income, if you're a sole proprietorship, they're going to get these copies of these Schedule Cs. Okay. So that is what the Schedule C looks like. And it transcribes all the information from the tracking sheet, whether it's QuickBooks or that little Excel sheet we just looked at, either one. Okay. And it's really cool when you think about it, because this becomes the IRS document. That's what you pay taxes on right there on line 31. Your income tax is based on line 31. Okay, line 31. Now, there's another little catch. I'll go ahead and explain. And that's why it probably would be better if you did 20% of that number and hid that amount for your taxes on the business. Okay, and here it is. As a sole proprietor, you will owe money to the federal government, right? Tax money. You'll also have something called it's technically your Social Security. It's called self-employment tax. Self-employment tax. Okay. It's your Social Security money. That's where it is. It's the money that's going into your Social Security totals. Okay. As a sole proprietorship, sole owner, the issue is that we have to pay 100% of our Social Security based on the net figure. If you work for someone and you get a paycheck, the employer pays half, you pay half. That's something. So technically, at year's end, we noticed, my wife and I, that it's about 20% of our net profit, right, that went towards taxes, and it covered both the IRS tax and the self-employment tax. So it covered both. Okay, covered both. All righty then. Any questions on this one?
Someone had a question if that, self-employment tax also applies to LLCs.
That is again kind of beyond my pay grade. We used to have look. Do we still have a tax specialist kind of
No.
person? Brian, I guess is yeah. So it says here, is there a CPA specialist at SBA we can consult with? Yeah, we don't have CPAs on staff, so that's kind of one of those things. And we can't recommend anybody because we don't want to, it's conflict of interest. If wherever you're located physically, because there's SBDC offices throughout the United States, right? So on these webinars, we've ended up with people in New York on these classes. We always say, look up your specialists locally, find out a CPA accounting group. Like I say, I use number crunchers here in Reading, which is not a full, CPA. If you get a certified a public accountant, they're going to be the most expensive, right? They've got the most schooling and they've got all the background. It's going to be the most expensive. But a bookkeeper or an accounting group, it's all you really need. And they then will help you with all those intricate questions. Okay, I'm giving you the basics. Okay, I'm giving you the basics, and that's why we have the disclaimer to visit the CPA or accounting group, and they're everywhere. So everywhere. So, and again, we're now covering here on the local SBDC here. We're covering Trinity, Shasta, and Siskiyou County now. So a recent happening, which is kind of cool. Okay, so let's go back. If I can find where'd my webinar go? Oh yeah, here it is. Is that the one? Yeah, I think it is. Let's hit that baby. Oh yeah, that looks right. So we're back to the simple Excel bookkeeping tracking.
Yes, we are.
Emily, thanks. Okay, so again, fairly easy to use tax form. Okay. And remember, you're going to get copies of both of these. You're going to get copies of Schedule C and you're going to get copies of the Excel sheet. So you don't have to worry about, gee whiz, what did Joe say? Right? That's terrible. I don't want you to have to go through that. So with that in mind, you'll get copies of both. And of course, the slide deck, which is also important. So again, tracking expenses using profit and loss statement from Excel, using profit and loss statement to prepare the Schedule C. And like I say, a lot of people can do that themselves. I probably could, but I have my accountant check it to make sure that I didn't blow it. You know what I mean? I'm good with numbers, okay? But it's always good to have, I'm up there. I just had my 70th birthday. I had a wonderful birthday party. So I'm not, a kid. So I like somebody to check me out. So Number Crunchers does that for me. So yeah, income revenue, cash received. Remember that bartered services are supposed to count. So in other words, if you do the old, I'll give you a chicken and you put a horseshoe on my horse, we'll trade, right? Technically, that's supposed to be turned into a monetary value. Not everybody, does it, but that's the rule. So taxable income is sales revenue minus expenses. It's pretty easy. Business expense. This again, these slides were prepared by we actually had a tax person. He moved out of state. He helped prepare this. His name was Joe too. So items both that are ordinary and necessary. Ordinary expenses, one that is common to the industry. Necessary, one that is helpful, appropriate for your trade. So in other words, if you're selling this, pen, okay, your retail. In my particular case, I'm selling service. So it's different, isn't it? For one, this you got to pay sales tax to the state. Service, don't tell Gavin Newsom, service, you don't pay sales tax. So the customer doesn't have to pay a sales tax yet. So each one's got a little different categories. If you rent a space and you have utilities and you have insurance for the rented space, that's clean. If you're going to write off your home or your rental, second bedroom, a little bit different, isn't it? Still do it, but it's a little different. Okay. Tracking your business expenses, you can use software, you can use the Excel sheet. Okay. I'll tell you, technology has definitely helped. I mean, if you go back the 50 years that I've been involved in business, we used to have to literally take that shoebox with all those receipts in it and put them on a piece of paper. Okay, back in the 70s. We didn't have this stuff. Zoom, my goodness, what was Zoom? This is a little George Jetson. This is one of the funny things about George. Everybody watched the Jetsons back in the day? Talking on a screen like this to each other, that's one of the things that actually happened. Our flying cars haven't got here yet, but we do have this, okay? Use the profit and loss to categorize your expenses, of course, and keep them tracked appropriately. And cost of goods sold is a little different because that is when you're in retail and you have to buy a product. That's cost of goods sold. Or if you're a restaurant and you're selling burgers, your cost of goods sold is the hamburger, the lettuce, the tomatoes, the ketchup, so there you go. So you'll have a cost of goods. Service businesses, no cost of goods. Can't write off your brain. So cost of goods. If you're offering or your hand or your arm or your, hammer, you can actually deduct the hammer. That's a piece of equipment, but there's no cost of goods. Okay. That was another thing that popped up during the COVID 2021, 1 year. Well, excuse me, was one of the questions was, what was your cost of goods? And we got call after call from poor people that said, wait a minute, I mow lawns. I teach, classes. I do yoga classes. Well, there is no cost of goods. Okay, no cost of goods. So we got indirect cost directly attributed to the product. That's where your cost of goods. And then, you also have stuff that happens like rent, utilities, phone. Those are ongoing expenses. And that way you can tell exactly how many things you got to sell to maybe break even. We talked about that on the other form. Food costs, gifts. Again, we talked about checking that out. Entertainment costs, depreciation. Depreciation normally occurs if you have a big piece of equipment. Big piece of equipment. Gifts. My wife, whenever a house closed, she would give a gift card to a local, like Safeway, as a thank you to the buyer. So that ended up being a gift expense. Okay. So you can do that. This was a funny that he put in there. The other gentleman, obviously non-deductible bribes. Most lobbying costs, penalties and fines, and political contributions, those are not tax deductible. Joe Dorco was fun. Maximize your goals. Take, again, advantage of everything you can get your hand on. Your CPA, your accounting firm can help with that. Take advantage of business tax credits. That happened recently if you had employees. And don't forget your retirement. You're going to need it. Okay. Track your expenses, run profit and loss, pay your taxes, sit down with your specialist. Remember this, making money is easy, keeping it the challenge. So there you go. Any last minute questions? We, I think, are just about there.
I'm not seeing anything in the chat right now.
Just some informational goodies. All right. I'm assuming I don't think we have a CPA there either. Yeah. San Mateo area, yeah. So check with your local SBDC offices. We're everywhere. Okay, we're everywhere. Every city, every county is covered in the United States. Supposed to be, and we're up here in Redding, Trinity County, Shasta County, and Siskiyou County. That's our jurisdiction. We'll be happy to help you one-on-one. Come in, do a Zoom like this, phone. We do all of it. We do all of it. And can guide you through the steps individually. If you have questions on what type of business you want to start, legal wise, should I be an LLC? Should I be a sole proprietor? Whatever, we'll guide you through that step too. Love it. Love doing it. It's yeah. I mean, I loved banking when I was a banker. Same reason, where we're helping people, and now I get to help people. That's great. This resource list is great. Information from the government, business planning company, bplans.com, and obviously other entities that could also be helpful to you. And our final slide, we have a wonderful YouTube channel. In fact, that's where this will end up going, to our YouTube channel. Hundreds of videos and or snippets we used to call NorCal Minutes. And a lot of free information on our YouTube channel. I mean, a ton. And we're always adding to it. So subscribe, go on there, subscribe on YouTube. And again, that's free. What a deal. I guess we Twitter, tweet. Which one changed names? It became X. Was that Twitter? I can't remember.
Yeah, that was Twitter.
Okay, all right. Yeah, I'm not attuned to tweeting personally. And there's some, of course, informational stuff there at the top of how to get a hold of people. I happen to be, my email address, I probably should start putting it on there, huh? joe@norcalsbdc.org is mine. And you'll see me on the YouTube channel quite a bit. So if there's no further questions, I want to thank you for joining us today. Again, we will send you a copy of the slide deck and a copy of the Excel sheet and the Schedule C, so you can take a peek at it and have it to use as a guide. And we hope to see you next time. And thank you so much. Appreciate it. Appreciate all of you for showing up. Have a great day.